listening to The Mortgage Scientists, exclusively on the Pod Station.
Hi, I'm Dave Forrest.
I'm Chris Hume. Together, we are the Mortgage Scientists. Happy New Year, mate.
Happy New Year,
I can't believe we're in 2026
Where did that
already.
go? Crazy. Episode 5, and it's the self-employed.
January is a massive month for self-employed, isn't it, mate?
Yeah, because you got that year end for your sole traders and on your limited companies because you're doing your tax return, aren't you?
31st of January.
31st of Jan. That's when you can never get to speak to an accountant in January.
Absolutely.
They're absolutely
busy.
rammed.
Yeah.
It's one of those things where everybody has to do it on the same day, which seems a bit crazy, but hey, that's the way the world works. We've mentioned this on other episodes. We start to think about it a bit early, don't we?
I think from a point of borrowing money for mortgages, when you're self-employed, lenders maybe don't understand you as well as you'd like them to.
Yeah.
We have battle after battle with lenders for clients that are self-employed, whether they're a sole trader, whether they're a partnership, whether they're a limited company. There are some lenders that really do understand them very well, but others are just not really interested in anything that falls outside of a box.
Yeah. There's so many self-employed people out there who possibly don't know where to go. I would imagine as a self-employed people trying to deal direct with the lender, it can be a lot harder. You are mostly nowadays dealing on the phone because, there's not as many branches as there used to be. You need a broker really if you're self-employed, don't you, to start to help you out?
Absolutely. Because lenders look at self-employed in such a variety of different ways, depending on how you derive your income, you really do need a broker to help you understand what the specifics are to your circumstances and how each lender will view that information. For example, if you're a sole trader, if you're in a partnership, your income is whatever your share of that net profit is. That's what a lender looks at. A lender will say, okay, well, if you've made £20,000 net profit this year, but you made £30,000 net profit the previous year, they're probably only going to go off the latest year.
Yeah.
There are other exceptions to that. Not every lender views things in the same way. But if you have differing amounts of net profit over 2 or 3 years, because that's how far back lenders will normally go, then that can have a fairly big impact. Similarly, if the profit is the other way around, you had net profit of 20,000 one year, and all of a sudden you've had an amazing year and it's 50,000, and you think, oh, that's fantastic, I can borrow 4.5 times 50,000. Not necessarily.
No, lenders are going to maybe look at that. Why is there a big increase, or why is there
a lot?
It's gone down so much, and there can be economic factors to that. I mean, we saw a lot of that during COVID area.
Post-COVID as well.
Post-COVID was really a difficult time for self-employed because you had bounce-back loans in there as well. Furlough, all sorts of things that affected it, and it probably lasted for 2 or 3 years, really, didn't it, for us, looking at accounts or looking at tax returns and lenders asking for explanations. We're sort of out of that now because a lot of the bounce-back loans have been paid off.
We're through that element of the COVID impact on self-employed and businesses, but we are still seeing that lenders, from a self-employed point of view, they are a little bit more conscious that you earning money is purely down to you or a couple of people. If you're in an employed position, you've got an employer that guarantees to pay you X amount per year. A lender can be quite comfortable that you've got a contract of employment that will pretty much guarantee you that for as long as that position is there. But when you're self-employed, you can have a good year, you can have a bad year. And this is why a lot of lenders will want to look at a 2 or 3 year period of time to take an average or to see a trend in how well your business is performing.
I suppose the other thing is when you look at an employed person, you're looking at a snapshot of the last, say, 3 or 6 months, even latest month with most lenders, really. You're sort of 18 months behind on a self-employed person a little bit, really, aren't you, or self-employed company, because your accounts maybe not done 9 months till after the year end if you're a limited company, or you don't do your tax return until the January after the sort of the April. It's a totally different arrangement, isn't it? Which we have to get our head round as brokers, really.
It is, and we're in tax return month, it's January. The information that you're providing to HMRC now is for that period from April 24 to April 25. There's been another 9 months or so of income that is still unaccounted for and will remain unaccounted for in HMRC's terms for another sort of 12 months.
Yeah, lenders will more and more your sort of like high street lenders, really, if you like, they will ask you for, say, 3 months business bank statements to show maybe income still coming in at the level that your account showed. They might want that. You do have people though who maybe do some lumpy work. They might work seasonally. Maybe choose a different lender there who'll look at it like that. So again, a broker comes in and helping you explain how that is, because a lender will just look at the facts. This is what it is, and sometimes you need a bit more nuance to it, don't you? And you need to explain a little bit of how that business works. You might have someone who does particular contracts, does that contract, it's done, but then maybe takes 6 months off.
From a self-employed point of view, it's your business. You organise who you work for the price you want to charge, for the skill that you have. Whatever the profit is that you make from that, that is a hard and fast number that a lender will look at for this year, for last year, for the year before. Every lender will take a different view on what those numbers look like.
One of the things I know you do and I do is a phrase you've said before, is get the people who look after you involved together. So the accountant's so important, isn't it? Get your broker and your accountant talking to each other, rather than you asking for the information to the client goes to the accountant. What comes back is totally different. On my self-employed cases, if there's accountant, my first thing is say, right, I'm going to have a chat with the accountant, introduce myself, and then I can work with them then. You might be coming to a year end where accounts need to be done, because we do have that situation, don't we? Around about October time, where lenders will no longer accept the previous year's
because they're
tax
over
returns.
18 months.
There's one or two lenders who'll go up to really January, but not many. Most lenders, and we're in January now, and even though you haven't done your tax return, they'll want that done, and you might have to do it a little bit early and pay your tax a little bit early than doing it, as everybody does, on the 31st of January. You definitely will not be able to get hold of an accountant on the 31st of January.
Absolutely.
And I think they all go on holiday then on the 1st of Feb.
Yeah,
so
definitely. But again, it's a really good point that you make there. Having your professionals together with you, your broker, your accountant, your solicitor, helping you organise those key three elements of your business strategy is really, really important. Even more so if you're a limited company. With a limited company, you are technically an employee.
Yeah.
You may well derive your income by way of a small salary through the normal PAYE system, but then the rest of your income, you might take it by way of dividends, which is a distribution of the profits to you as a shareholder in the business. You are still being paid from a profit point of view. It's a slightly different element.
We're just going to go to a commercial break. We'll be back after this short message.
Do you have a passion, hobby, or expertise and want to share it with the world? Why not do a podcast? The Pod Station offers a wide range of packages to make this a reality, ranging from training and support for those who have no idea where to begin, to podcasters who just need somewhere to host their show. With prices starting at a mere £15 per month, you can now get involved in one of the fastest growing entertainment forms in the world without all the headaches. To find out more, visit thepodstation.co.uk/station-packages. And remember, those with passion, podcast. This episode is sponsored by Dunkin' Biscuits, a biscuit lover's guide by Chris Hugh.
Certainly, I would say over the last 10 years, things have evolved a lot. Lenders now do look at some other things as well. I think lenders, we said, may not understand, but more do understand how it works. And I think as brokers, we've got better and better at looking at a set of accounts. We do all sorts of training, don't we? So lenders will use net profit instead of dividend as well, won't they?
Yeah, that's the element whereby limited company director shareholders will probably be looking at how much they want to take in PAYE and dividends according to their likely tax position, largely around the high rate tax threshold. You might have a company that earns you, technically, you could have taken dividends that would put you well into that high rate tax threshold, but to avoid you paying tax, you only physically took the dividends that didn't put you into the high rate tax threshold. There are lenders, however, that will understand that you could have taken those higher amounts and will utilise those potential higher amounts in that affordability model that they will look at as to how much they might lend you on their model. Again, every lender will have a different view on their affordability structure and how they view ways that you derive your income from your business. So again, it's even more important that you have your broker and your accountant talking to each other.
Yeah, those figures can be vastly different, can't they?
Hugely.
Using dividend and net profit can give you a vastly different borrowing, a bit like when we were talking about employed people and bonuses and car allowance and all those type of things. People out there don't always know you can use those. And again, it's like you might have a self-employed person sat there thinking, well, I can't access actually do what I want to do. But speak to your broker, because there's other ways of doing it. And there's many different lenders out there who'll look at it totally differently.
They do. And when you're looking at how lenders view self-employed, you might be a sole trader, you might be a partnership that's been doing really, really well over the last sort of 3, 4, 5 years. And the conversation with your accountant is, why don't you look at forming a limited company? Oh, that's a great idea because of all the benefits that the accountant gives you. But that can have implications on how a lender will view a newly formed legal structure.
It's one of those things when someone comes to you say, I need a mortgage and I've just gone to limited company, and you go, oh. No. Could you not have rang me before you did that? We'll have a chat with the accountant, because again, the world changes, doesn't it? And a lot of lenders can see that and they're sympathetic to why you would do it. And usually if you're in the same line of work, it can be looked at, but again, it may well limit you with who you can go to.
Yeah, your stack it high, sell it cheap lenders that want an application in that doesn't touch the sides, has very little human input to it. They're not really interested in getting into detailed conversations about the whys and wherefores. You are probably limiting yourself to maybe less of the high street lenders. Your broker will know instinctively which lenders to have the right conversations with if you are changing or have changed legal structure within the last 12 months or so.
What we always say, it's a bit of planning, isn't it? I'm going to do something. How's that going to impact me? Let's maybe get my accountant and my broker speaking to each other while we're doing it. Try and make the transition smooth. If you know you've got your remortgage coming up and you might want to borrow more, or you want to do something, might want to move house, have that conversation early. But I am looking at changing to a limited company, and then we can plan that.
6, 12 months, be thinking about where you want that to be.
Yeah.
I think in terms of how lenders want to evidence your income, there's been various ways in the past that lenders have asked self-employed clients how to prove their income, whether that's been a reference from their accountant, which I know one high street lender still does. Yeah. Typically, lenders want to see your tax calculation and tax overview for the latest 2 years as a minimum. That's generally what most lenders will ask for. They don't want a copy of your tax return, because that's only what you say you've submitted to HMRC. They want the tax calculations and tax overviews, because that is the evidence of what you've actually submitted to HMRC, but also that you've actually paid the tax that was due on time.
Your broker will ask for those as well.
They will. Your accountant will know these documents inside out. You can access them via your government gateway, so you can log into your government gateway. It's very easy to actually download those documents to then pass on to your broker, and that gives them all the information about how your income is derived, whether it's a sole trader, it's net profit, it's profit from land and property, it's dividends, however that is, and your broker can best advise the lending options will work for you.
And then you do throw things in. You might have loans within the company, you might have vehicles. One of the ones I always see is bought the vehicle yourself. You've got a personal loan, say, but you're using it for your company. Well, then it's in your credit file from a personal point of view. Again, they're all the nuances that you get into, don't you? And you might have to speak to a lender and say, well, this is the situation. If we can provide that evidence, it can change things quite drastically, can't it?
It can. I suppose whilst we're touching on this element of structures and things, we may just sneak into contractors, maybe not in too much detail, but also contractors that may have what are called umbrella companies, limited companies. It's a whole new element how lenders might look at that income, might look at your contract, might look at your employment structure. There are certain lenders that are really, really good at that, and others that are absolutely hopeless.
Yeah, I've found ones that almost treat you as employed if you're under an umbrella company, but you've been doing it for, say, 12 months or 2 years or something. I mean, supply teachers are an interesting one, aren't
Locum doctors.
Locum doctors. That was a big change, wasn't it? Where
IT
they went
professionals.
self-employed. Such a variety of the way lenders will look at you. We'll only deal with you as self-employed, and you've not been doing it for 2 years, so we can't do it. And then someone will say, well, actually, you get a pay slip effectively. We'll deal you as employed. And there's people who pay tax at source and then
have to
do a tax return. There's that difference. Possibly that's another show, is contractors, isn't it? You know,
contractors. We could have another half hour
on that one. Yeah. One little thing I was going to just touch on, and it'll be another episode, which is buy-to-let mortgages. More and more people are doing buy-to-let mortgages, i.e. rent house as a limited company. A lot of the changes that have come in.
That again is probably another episode all on its own there, Dave.
Yeah, you mentioned land and property on your tax return. That can be included in your income, which may give you more borrowing or whatever the case may be. But yeah, buy-to-let is a whole new episode.
I think from a self-employed point of view, if you're earning money from anything other than purely employed position, get in touch with a broker, have a chat with a broker as early a stage as you can. Give Dave a call, give yourself a call, so we can help guide you through that landscape for the self-employed.
There's sort of a theme coming, isn't there? Speak to your broker as early as you can if you want to do something or you want to make changes in anything. anything to do with raising money or buying a house, moving house, doing a remortgage, keep in touch with your broker. We'll try and keep in touch with our clients as much as we can and help them out. It's only a call away, isn't it?
Absolutely.
Yeah, that's what we do every day.
Yeah. We're always there apart from that week over Christmas.
Yeah, definitely not over Christmas.
It's been great to catch up on that, Dave.
Good.
Looking forward to the next episode.
See you on the next one.
See you on the next one.
To find out more, email info@themortgagescientist.co.uk.